I'm joined by Ross Norman, CEO of Sharps Pixley. Ross, good to see you. Thank you for coming in. So this is interesting. You're saying that gold has experienced half a year's move in August alone. So are people just buying gold for protection in case there's another financial collapse? What's behind this rally?
Well, gold has two sides to it. One is a commodity with some very attractive fundamentals. And you need to remember that gold's been in the bull run for 11 years. On average, it's gained about 18% every year. This year, we've seen that gain up until August, and again, the same amount again in the period since then. So it's a 34% increase on the year to date. This is driven by gold's other role, which is a lifeboat, if you like, in a crisis, and we live in historic times. So it's the flight to quality that's been driving gold to these record highs.
And Ross, I'm wondering, do you see signs of bubble thinking, those that say, well, gold is going up and I want to jump on the bandwagon now to make a profit?
Well, I don't think it's in bubble territory, but I think the possibility for it is still there. As I say, an 18% rise each year is based upon some fairly sound fundamentals. The rally we've seen in the last few weeks is based around historic economic issues in the markets. So if we move rapidly to $2,000 an ounce, I think you could probably say that the last $100, possibly $200, represents bubble territory. But I do think underneath and underpinning this market are some very sound fundamentals to have taken us here.
Such as?
Well, on the demand side, we've seen fantastic growth through the ETF. In particular, central bankers who were former sellers of gold, they used to contribute on average 400 tons of gold a year, roughly a quarter of its needs every year through selling. No longer there, they've turned buyers.
Yeah, they have.
And mine supply is flat, so very strong.
Okay, so given that gold doesn't depend on industrial demand like other metals, if and when it starts to come down, we're going to see some hefty losses, aren't we?
I don't know. I mean, you need to remember that the floor has raised in terms of the mine production costs. With rising costs for fuel, for water, for wages, indeed resource nationalisation, the floor's raised. It's above $1,000 an ounce. This isn't a bubble which is going to collapse. Were policymakers to come up with decisions on long-term debt reduction and jobs growth, we could see that premium coming out of gold. We could see a few $100s only coming off the market. A bubble about to collapse? No, I don't think so.
So we're just talking a few $100s?
Absolutely.
All right. And so then how do you pinpoint the top for gold, though? How would you know if it's reached its peak?
It's a very good question and a difficult question. I guess it's not a number so much as the manner of getting there that matters. As I say, it's 11 years in the making getting to this $1,918 an ounce. If the market galloped, if there was a madness of about the market in the sense that it was galloping and ignoring overbought signals from the technical markets, I think you could then say we're in bubble territory. It is overbought at the present time, marginally. That doesn't mean we're in a bubble territory. There is a chance for some small retracement. We're seeing it this morning. We came down this morning to the 1830s. We're seeing a bit of profit taking coming in. But I don't think we're in bubble territory. We'll know it because the market will gallop and it'll go parabolic.
So do you think general economic uncertainty will keep this rally going the rest of this year and 2013 at least? Certainly
until, I think what the market's looking for is different on each side of the Atlantic. In North America, they're very sensitive on jobs data and to that extent economic growth. On this side of the Atlantic, it's sovereign debt default, so we're watching long-term dated Spanish and Italian bonds to see how they're performing. So the market's watching these things very sensitively to know whether there are sensible plans coming forward. And Jackson Hole this Friday may give us the lie about whether the policymakers have got plans to relieve these important economic problems we've got.
All right, and thank you very much. That's really interesting to get your thoughts. Ross Anthony of Sharps Pixley, thank you very much.